Welcome to another great episode of FreightWaves Today. Julie, my co-host, we have some big announcements for Sonar.
We do. So exciting to announce. Press release went out today, announced that the Department of Transportation has chosen Sonar as their source for high-frequency market intelligence. So they'll be using Sonar data to look at economic impact, federal transportation analysis, lots of really good stuff.
I think the whole point is, what DOT is trying to do is upgrade its understanding of the freight market and really get a sense for, DOT's mission is all about safety, security, and ultimately understand the economic viability of the freight market, because it tells them a lot about how effective they're doing around policy decisions, as well as funding. Keeping the flow of transportation, keeping our economy alive is really important. We're really honored to be a partner with DOT in helping them achieve that goal as they upgrade their systems. And one of the things about DOT is it's historically relied upon government data that has a significant lag. The fact they're choosing Sonar is a testament to the importance of high-frequency data and making decisions that are obviously really important to our nation's supply chain. We're excited to be a partner with DOT. I want to thank DOT for selecting Sonar. We have a lot to talk about today. Absolutely a lot going on in the freight market. We've had some great guests just yesterday. Today, we're going to talk about autonomous trucks with the Chief Commercial Officer of Torc. We're going to talk about AT Kearney did a great report today about the state of logistics. They do it every single year. We're going to hear from one of the authors of that report, is going to walk through it. We're also going to talk about AI dash cams. So it's important as you think about safety, is using AI to evaluate basically what we're seeing. And then we're going to end up talking about international freight and trade as well to really round up the show.
Yeah.
So Julie, I think we have a great show. Let's get into the headlines.
We kick things off with a brutal new wave of bankruptcies and layoffs sweeping through the transportation and logistics sector. Over the past 10 days, trucking companies, truck dealers, repair businesses, and logistics providers have filed for Chapter 7 and Chapter 11 protection, while hundreds of workers faced job cuts nationwide. Among the most notable filings was Laredo, Texas-based R Carriers, Inc., a cross-border trucking company that filed for Chapter 7 liquidation on June 5th. R operated a fleet of 177 power units and employed 286 drivers, according to Federal Motor Carrier Safety Administration records. Meanwhile, Dallas area logistics provider Allen Ritchie, Inc. will close an Irving transfer center and lay off 232 employees beginning in September, according to a WARN notice filed with state officials. The latest filings underscore the continuing strain on freight-related businesses as elevated operating costs and financing challenges continue to pressure carriers and logistics providers. Over in the truckload sector, a major acquisition is poised to expand growth opportunities across the Southeast. Chattanooga-based F2F Transport announced Monday that it has been acquired by LRT Group, a Fort Payne, Alabama-based transportation holding company focused on building transportation-based businesses as part of its strategic growth. As part of the acquisition, F2F Transport will join a growing portfolio of transportation companies under the LRT Group umbrella. The move is expected to create new opportunities for growth and expanded service offerings, including increased access to dedicated freight opportunities for F2F's network of owner-operators. Operations at F2F Transport are expected to continue without interruption, with customers, owner-operators, and business partners expecting the same service and support. Finally, a closely watched freight index is signaling that a positive inflection point may finally be on the horizon. According to a Monday report from Cass Information Systems, a positive inflection in freight shipments now appears likely after 40 months of year-over-year declines. The multimodal shipments component of the Cass Freight Index dipped just 1.2% year-over-year in May, the smallest decline in 18 months. An increase in domestic intermodal volumes, while many spot indicators suggest improving freight demand, drove the change. Assuming historical seasonal volume trends throughout the remainder of the year, the index is projected to log a 1.8% year-over-year increase in the back half. Meanwhile, Cass's truckload line haul index, which tracks rates excluding fuel and accessorial surcharges, increased 6.9% year-over-year, the largest increase in nearly 4 years.
Julia, I get asked this a lot about Cass's index. People look at the shipment index that actually in some ways lags some of the other data. First of all, Cass is a really important index. It's sort of the benchmark for freight. I think what's misunderstood oftentimes with the Cass shipment index is it tracks the total number of freight bills, not the total volume of freight. And it has a high concentration of LTL. LTL as a percentage of the total index in terms of shipments is higher. Therefore, what you tend to see as the market recovers, particularly industrials, companies are actually building bigger truckload shipments, and therefore the number of freight bills drops. That's why the Cass index is operating the way you would expect it to in a recovery, and now we're seeing the recovery fall through.
Yeah, what I think is interesting is we've had the conversation over the last few weeks quite a bit about certainly capacity has exited, but there's been a little bit of conversation around is demand really getting stronger or not, and this seems to absolutely point to the fact that it is, that there is an improving freight demand. Obviously, you mentioned
particularly in the
truckload
industrials.
Index, and then and intermodal volumes as well.
Yeah, intermodal is interesting. Intermodal's been quite robust. Even during the depths of the freight recession, intermodal definitely stayed persistent. LTL is what as the economy recovers, companies are building higher truckload volumes. They're taking away their LTL shipments, put it in truckload. One of the things we've heard just recently with a lot of the interim reports, one of the great things about LTL is you get these interim reports where carriers put out interim reports during the month or during the quarter where you get really a sense for how things are trending. We are seeing some improvements. And of course, Cass's shipment index demonstrates that. One of the other things that I think is really interesting is the cost side is way up. I mean, it's not just shipment volume, but I think anyone that watches this show is aware of just how strong and bullish the freight rates are.
Yeah, absolutely. And I think it's going to be absolutely interesting to continue to watch those freight rates as we get into end of month, end of quarter, and leading into the 4th of July holiday. But speaking of that cost pressure, what are your thoughts on the continued announcements of layoffs and bankruptcies? Obviously, we're saying some of the cost pressures should be coming off as rates are going up, and we're seeing a little bit of relief in fuel prices as well, probably through the end of the year. Do you think those announcements are going to continue to come? Do you think that the cycle was just so long that even now that we're recovering, a lot of those companies won't be able to recover?
Yeah, I think it's misunderstood that, I get asked this, in a recovery, why are companies still filing bankruptcy? And the reality is that businesses, balance sheets have memory. And what that means is that if you go through years of downturn like we've experienced, is you're going to have a significant deterioration in the quality of earnings. You have a significant deterioration in the health of your balance sheets. They probably hit credit lines to really ensure that they had working capital. They may have taken on more debt, but it impacts the cash flow. And the problem is that when you go through a period like we've gone, it just means that those deficits have piled up. And then during recovery, two interesting things happen. One is drivers end up leaving and going to the higher quality. They start to talk to other truck drivers at the truck stop and talking about how many miles they're getting. So you see a flight to quality that also happens where drivers are like, look, I'm going to take advantage of these opportunities. I haven't been making a lot of money. The better, higher quality carriers are well positioned. Obviously, this immigration story and this regulatory crackdown is also a problem for certain motor carriers. That's also showing up in the data. But really, it comes down to the fact that balance sheets have memories, and because they have these memories that go for many, many years, the deficits have piled up. The operating costs have continued to be a problem, cash flow, and then you have equipment values increase, so the banks are more likely to foreclose. I talked to some of the lenders about the fact that during the depths of the freight recession, they didn't want the equipment.
That's right.
They didn't want to sit on equipment, so they would rather get paid something. And they created workout groups, and they did things to help, enable carriers to stay in business longer. But as we're seeing the market improve, they're more likely to take possession of the equipment because it has some value. So that's also happening. Obviously, shippers are being more discerning on who they're doing business with. We've heard about that over the last couple of weeks, is just how brokers and shippers alike are spending more time looking at their carriers because they don't want the risks associated with it. It used to be security, or it has been security. Now with Montgomery, it's a safety element as well.
Yeah, that makes a lot of sense. And then it also makes sense why you're seeing the actual full Chapter 7 liquidation versus just restructuring or Chapter 11.
Yeah, I mean, if you can get
those
some
assets
money,
are worth something now.
I mean, we saw Celadon, we had Tom Albrecht, who was the CFO of Celadon when it folded. That was December of 2019, and we had a freight recession, the bloodbath of 2019, as we like to call it. So that kept, Celadon's foreclosure or shutdown due to some accounting irregularities took place at the end of that. New England Motor Freight failed in early of 2019. Sort of like bookended that, you had one of the most iconic LTL companies that failed, ended with one of the largest truckload companies. 2019 was definitely bookended with some challenges, and that is something that's happened. We will continue to see trucking bankruptcies. Central Motor Freight, actually, I believe it failed in 2021. Like the LTL company.
Yep.
And the reason was that the land values had more, the terminals had more value as well as the trucks, and so they liquidated it. So we're going to continue to see bankruptcies. It's going to happen even when the market's improving. That shouldn't shock anybody. Balance sheets have memories, and that's all it's about. Let's get to the Sonar update, where we'll talk about what we have actually seen in the market. June, and everyone's wondering, when is the July 4th holiday surge going to happen? When are we going to see capacity tighten? Not happening right now doesn't mean it's not going to. We expect it to, but we're not seeing it currently. In fact, tender rejections have cooled a little bit. We're down to 16.7%. We were at 17.2%. Still, 16.7% is really, really tight. We're at 17.2% over the weekend. Just means over the last couple of days that things are a little looser than they have been. In fact, spot rates are responding to this as well. Spot rates have dropped 20 cents a mile overnight for van. Again, this is not something to be alarmed about. It's just more of a reflection that capacity is looser this week than we had seen last week. And we're waiting for July 4th push, because ultimately it happens every year. Even in the weakest years, we saw capacity tighten, tender rejections go up as we move into the July 4th holiday. So eyes are really watching the market to see what happens. When we look at the map in terms of where things are good, remember blue, our markets are good. If you look here at the map, you'll see that this map today looks very similar to the one from yesterday. A lot of the markets that were showing weakness, South Florida, the West Coast, with the exception of Southern California, west of I-35 in Texas, those markets continue to be weak, whereas the strong markets, we look across Kentucky, Nashville, look at Chicago itself, we're looking at Dallas, Atlanta. Those markets are good. Southern California is good. Stay on the blue markets if you're a motor carrier and you can get freight. You're not having to deadhead to reposition your truck, because the blue markets, we have an app specifically called Blue to Blue that is available in the iOS store. Those blue markets basically are where you want to run. If you run Blue to Blue, you're likely to find loads. That's the whole purpose of the haul map. And that's the reason we talk about Blue to Blue. That is the name of the iOS app, by the way, inside the App Store, is Blue to Blue, because the idea is that if you run in those blue markets, you can keep your trucks loaded. Core Sonar has this as well. You can get it. Also, if you're looking for quick rates, if you're looking for a second opinion, you should always have a second opinion for rate products. I believe that everybody should have at least 2 rate products to sort of benchmark. Different rate products do different things. Our focus on high frequency data, so it picks up a lot of these market tightening as it happens really quickly, and market changes. And so you know whether you're leaving money on the table, or if you're trying to buy capacity, whether you're appropriately pricing your buy rates. That's why high frequency data matters, because it picks up the market movements within 24 hours, which is really important. And that's where we're focused on it. We're uniquely positioned at, and that's why it's good to have a second opinion. when it comes to having rates. I want to talk a little bit about container markets, because container markets are something that really tells us a lot about the retail import market. And it's been a little bit soft over the last couple of months, not soft in the sense that it's bad, just hasn't seen the acceleration. In fact, June got off to a slower start than we've seen the last couple of years. Now, in fairness, last year we were recovering from the Liberation Day tariffs. So naturally, June was in a pretty significant recovery. It started off pretty early in the month. This year, it's actually been a little softer for the first 2 weeks. We finally have seen import bookings kick up, and import bookings lead the broader import market in terms of imports into the United States, what clears customs, what shows up at the ports. They lead it by about a month because you're looking at bookings in places like China, Vietnam, South Korea, et cetera. You're looking at the point of booking. That's why we look at the bookings to tell us what's likely to happen a month later in terms of the import market. And if you're a trucker, that's important because Southern California, as well as all ports across the United States, set the tone for the big retail push that's in the second half of the year. And it was a little muted for the first 2 weeks, but now we're starting to see it pick up, which does tell us we're going to have a really good second half and a really good peak season. At least that's what it's indicating as we talk right now. Container rates are also responding to this. Container rates are absolutely have gone up. This is insane for the truckers because we talk about 10% or 20% year over year rate increases. Container rates have jumped from $3,200 for a TEU from China to the U.S. West Coast to $4,800 just in the past 2 weeks. That's how fast these markets can move, and that's how fast the container market can move. And as Seth Holm yesterday, he's an analyst, he's an investor that invests in trucking stocks, actually all transports, but he loves the trucking stocks, talked about the fact that what we see in containers, it does foretell what potentially could happen in the trucking market. You see these moves of 50% or 100% in a matter of weeks. That seems very unusual for truckers, but we see it happen in the international container markets, could very well see it in trucking, as Seth predicts. The last thing that everybody's looking at is Hormuz. What does that mean for fuel prices? Fuel prices have dropped. We expect them to continue to drop over the next, well, frankly, probably through the rest of the year, because that bottleneck that is Hormuz is getting relief. We're already down to $78 a barrel for WTI. Forward curve suggests that we could be dropping pretty sizable numbers over the next couple of months as people reprice the cost of oil and energy with the lack of a geopolitical event really strangling one of the most important energy corridors in the world. So this is all positive. Carriers are getting some cost relief when it comes to buying fuel. Shippers are going to get less cost inflation due to fuel surcharges, and brokers are finding the market is a little bit more responsive to them on their contract freight as well as spot opportunities. And speaking of spot opportunities, if you're a shipper and you're looking for last minute capacity, if things break, routing guides break, carriers don't show up, and I think this is really important moving into the July 4th holiday, RXO has created a hotline for you available to find last minute capacity. That last minute capacity is available when your routing guide breaks. RXO has positioned themselves to be there as a last minute response, and lack of a better term, a 911 operator to respond for those capacity now movements. You need something. The risk of not having a truck show up means you may miss sales, you may have an inventory stock out, you may shut down your plant. RXO has positioned themselves to be there for you. You can reach out to RXO at rxo.com, get connected. And this is really for those opportunities outside your routing guide. They love to take your contract business, but they really are there as well to position themselves for those last minute opportunities. And one thing that's special about RXO is their private fleet operations. These private fleets, because they're typically large corporates, either retailers or large manufacturers, do not have the regulatory compliance problems that exist in the overall over-the-road trucking market. The reason it doesn't have those compliance problems is because these big companies have giant targets on their back, and we're not taking the risk of hiring drivers that not qualify. That's why RXO, through their acquisition of Coyote, is well positioned to take advantage of those opportunities when you need capacity and you need compliant capacity. So reach out to RXO at rxo.com.
All right, Craig, let's talk about ocean container rates and container in general, right? So you mentioned in the video that year over year, the comps are tough based on pull aheads from Liberation Day, but we're starting to see it pick up.
Yeah, it's been a little bit slow in terms of bookings. And again, bookings is all about what gets booked on the ship. I like to say book on the boat, but ship people get really mad when I say that. Booked on the boat at the point of origin. So a little different than what we see with customs. It leads because if you want to count the number of boxes that get off the ship, then count the number of boxes loaded on the ship, and you get about a month to 6 weeks, in some cases during the peak of COVID, we saw it, 2 to 3 month leading indicator. And so looking at the bookings data, which was pull that up real quick, if we pull up the bookings data, you could see where in past years, that yellow is 2025, we saw a big dip that happened during Liberation Day tariffs, and then we saw a real resurgence. So I don't really look at 2025 as an indicator, but you saw it also in 2024. You saw a ramping of volumes. This year has gotten off a little bit of a slower start, but the booking season, the container season is here. We are seeing volumes increase. I think the war resolution will actually increase confidence. I think a lot of the concern about the economy and really impacted consumer sentiment has been largely related to this uncertainty of this war. We're going to see $200 barrels of oil. That just saps consumer confidence. I think it's pretty remarkable. I was looking at it just a second ago. Oil's down to $76 a barrel on WTI, which is just a sense, this sort of catastrophic $200 a barrel. And I think what's really remarkable about that is the fact that this is the tightest, most destructive oil and energy event since OPEC. And yet we never got above $1. I think 120 was sort of the peak of oil on a global basis. Just tells us basically that there was a lot of more supply than people gave it credit for. The market wasn't as constrained as we thought it was going to be. And some of the panic just didn't set in. So that certainly helps consumers. The last point I'll make about all of this and today is Seth Holm pointed out something really important yesterday, where he talked about the fact that, we have talked about the potential of spot rates going to double digits. There's been this conversation on X. Someone made a prediction about that. Is that even possible? Container markets prove that you can have that. Container markets where you've gone from, during the peak of COVID, we went from, $800 to $1,000 a container, all the way to $20,000 a container. And so we saw a 10 to 20x increase. That could happen in trucking if you believe that we're going to reduce 20% capacity and we're going to have an economic surge or a volume surge and the economy ramping. That could actually really cripple the availability of capacity, and it will take some time. And so we could see spot rates go absolutely through the roof.
Yeah, and this is I love talking about this, not just rates, but about these leading indicators. And I think it's this context that precedes the rates that really is the important part for people to understand.
Yeah, and I think, we certainly do it through our channel checks, we do it through the show, but we also look at the data inside of Sonar. And I think what's interesting about the container data is it does tell us what's going to happen, particularly on the West Coast, what's likely to happen. The fact that it's been a little slower to start this year, I think is a sign that perhaps retailers were more cautious than they had been. We're just really cautious about trying to make sure that the economy was going to sustain, that the consumer was going to hold up. Clearly, the data says that the consumer is doing better than expected. We're seeing an employment number. And I think what we'll see is as we move into late July, August, we should start to see that push for the holiday pre-positioning into the economy. That will be great news for trucking companies and intermodal operators that are looking for that surge.
Yeah, I think that we'll learn a lot about consumer confidence and what to expect in the retail peak season next week as well, when we see Prime Day deal days for Target and Walmart as well. With that,
it's going to be great. We'll be right back, and we're going to be back with the Chief Commercial Officer of Torc Robotics Autonomous. Stay with us.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
Well, autonomous has got an enormous amount of attention. Yesterday, we talked about the fact that the Laredo cross-border is an ideal location for autonomous. This was a part of a Laredo summit this week that really talked about driverless trucks, really ideal for those cross-border movements when you're not moving long distances, but a lot of time is really detained across the border. To talk about that, we've got Andrew Culhane, the Chief Commercial Officer of Torc Robotics, to give us the download on what is happening. For those that aren't familiar with Torc Robotics, it is a Daimler Truck subsidiary, and Daimler Truck is the largest truck producer in the world with its ownership of Freightliner. Welcome, Andrew. How are you?
Doing great. Great to be here.
Well, let's talk about autonomous. This is a lightning rod for everybody in the trucking or around trucking, simply because it has a lot of implications. It might be the most transformative technology to come into our industry. Brad Jacobs certainly attested to that yesterday. I'd love to hear your sort of take on this idea of cross-border freight being specifically targeted for autonomous.
Yeah, I think there's going to be a lot of applications and use cases for autonomy, right? And, I've been in this industry for almost 20 years. One of the things that I try to avoid is the overhyping of anything in tech. And so it's interesting seeing the commercial break, how many of those companies are using AI, data analytics, these amazing new tools to improve the freight market, right? And so autonomy, I think, is one of these other amazing tools that we can bring to light. And you talk about cross-border, you talk about Laredo up to Dallas, these really dense freight lanes. We see there being tremendous opportunity to enhance the existing freight networks, help the U.S. and the U.S. economy double down on bringing more of that manufacturing back, and really leveraging it as one more tool in the toolbox for all the great folks listening to your show here that work in logistics.
So, Andrew, I went to Baylor University. Right off of I-35, this massive corridor. I was down at Baylor right when NAFTA was first enacted. So just the amount of growth that's been along that Texas corridor has been absolutely substantial. The cross-border trade is becoming increasingly more important as companies move back production to the United States. But the big issue is that the amount of time that drivers spend at the border is just a massive time suck. And there's also this issue of cabotage of drivers that come over across the border that are not licensed to operate point-to-point transportation in the United States. I'd love to hear how you're thinking about driverless trucks and really the idea of having the driverless trucks or autonomous trucks along the I-35 next year.
Yeah, absolutely. So, you first bring up the point of Laredo. Laredo is this really unique point in the US freight network. As I tell anybody in logistics, if you get the chance, get down to Laredo. There's a lovely point right there by World Trade Bridge. You can stand and see just the sheer volume of it. And you bring it up very correctly. There is massive cross-border movement, but almost all of that cross-border movement then needs to come and drop a trailer somewhere in Laredo, hook back up and go north. And so being able to tap into kind of a natural drop and hook point in the networks, ones where, again, those drivers can't typically cross that border checkpoint north of Laredo. And so how do we help move all that freight back into the US economy? How do we bring that freight or even empties back down to Laredo to get them back across the border? And so we think autonomy, particularly on that I-35 corridor, has a chance to really, really make a big impact with all of the shippers and carriers and folks that work down there, but also help move that freight in and out of Laredo more efficiently.
Yeah, I think that makes a lot of sense, Andrew, particularly in an unbalanced lane like that is where you might have an unloaded backhaul. I want to talk a little bit more about Torc, and you guys have done driver out validation on closed courses at highway speeds. What kind of milestone is that for you, and what's next then towards this goal of 2027 actually operating in commercial lanes?
Yeah, I'd say keep an eye out for more of those types of milestones. Again, having been in this industry for a while, you may find Torc to be a little bit quieter, a little less focused on the hype cycle and much more focused on those real meaningful progress points to getting a scalable, profitable product out there. Not the next great demo, not the next kind of interesting thing that we can show you in a cool video. Admittedly, the videos playing right now are pretty cool, but for us, it's all about unlocking that real value with the customers, right? And so you'll see more and more of those proof points, and driver out is one of many, right? We have to figure out and prove to the industry not only that we can do it once, that we can do it repeatably, that we can do it safely, that we can do it reliably, and ultimately provide real meaningful TCO benefit to the customers. And so I think the hurdles are quite clear, and you'll continue to see us jump over one after another as we get towards that 2027 commercial launch.
Andrew, what is the history of Torc Robotics? Like you said, it's a quiet name. Obviously, being a part of Daimler gives you an advantage. You don't have to convince investors to invest in the business, so the hype cycle isn't as pronounced. There's also the downside of folks, maybe our audience doesn't know Torc that well. How would you describe it? What's the history of the business?
Yeah, so I'm one of the originals. So if you go back and you look in the history of all things self-driving, 2007, there was this big race called the DARPA Challenge, and Torc was fortunate enough to be one of the finishers in that. We took a very different path, and that's when I speak confidently about what it takes to commercialize this technology. Torc took the approach of taking early adopters in off-road, mining, military construction, and actually commercializing self-driving technology with partners like Caterpillar and others. And so we've seen the ingredients that it takes over the years to truly commercialize in different industries. And now bringing all of that knowledge, almost 20 years personally here at Torc, of what it takes to bring the right partners, the right ecosystem. And you mentioned Daimler, right? How fortunate are we? We have the largest OEM, globally, and also here in North America. Daimler Truck North America is an absolute powerhouse for your large fleets, your large over the road. And so we have these huge advantages that I think let us see the landscape and what it's going to take to bring these to market. And we have the pedigree of doing it for a long time, right? We didn't just start a year ago. We don't need to take reckless chances, right? Freight is a notoriously conservative industry from the customer side. And I think our values and our pedigree align very well with our shareholder from the Daimler side, but more importantly with the industry.
Andrew, what is special about Texas? The cross-border traffic in Laredo makes an obvious use case and pilot for this particular type of technology. But a lot of the pilots that we've seen have actually taken place across the state of Texas. Is it the wide, expansive highways that enable you guys to do it? Is it a regulatory backdrop? What is really driving all of the autonomous pilots taking place across the great state of Texas?
I'd say several things. You hit one, freight volumes are there, right? You're never going to be looking for a load of freight leaving Laredo. That is just massive traffic day in and day out. Regulatory, obviously they're really leaning in, and our team works very closely with as many others do in the state of Texas. And I think the thing I would say most about that is consistent regulatory, Whether you're talking all the way up to the federal level or the state level, the most important thing is consistent, clear regulatory environment that we know how to work in. And so one that kind of continues to be true in Texas, and I was down at an event with Governor Abbott, and throughout his view of Texas is that clear, consistent regulatory environment. Obviously, weather factors in, right? I'm here in Virginia. You go further north, you get some more interesting weather, and so when you think about how to prove that initial product validation and product launch, Texas really provides a lot of benefit in multiple fronts.
So, Andrew, speaking of the regulatory environment, the Self-Drive Act of 2026, I believe, is in front of the House right now. So from a federal standpoint, is the regulation keeping pace with the technology? And what are your thoughts on that act?
Yeah, I think we've been clear, as have many in the industry, right? A clear, consistent framework that supports safety, that supports transparency, we are all for. And so I think that's something that we definitely support. We've been public about that. Again, many industry bodies have been public about that. And it comes down to that key point. The clarity, the transparency has to be there for both sides to work in this industry. And it's not new and unique to us, right? Any transformative technology has always had some of these hurdles and that need to get that alignment. And so as we see that nice federal framework starting to shape up, we hope that dialogue continues. And that we can continue to work state by state to have that consistency as well.
Andrew, you talked about total cost of ownership. TCO is the number one driver. It's interesting, whenever I hear people talk about the electric semi, it's always like, great, this is fantastic, it's cool technology, it looks amazing, very sexy. The problem is we don't have enough data for total cost of ownership. You could argue the same thing with autonomous, and we've all seen the McKinsey reports. The industry has talked about the savings element. I think it's hard to argue that drivers, there will be significant savings when you eliminate a driver. But this technology is very expensive. When are we going to get some really solid data outside of the pilots to really understand TCO?
No, that's a great point, right? And maybe I'm a terrible technologist, right? Because I don't really try to sell hype, right? I've been around this long enough. You work in mining, you work in military, you really understand what you have to prove at each step of the way. So as far as it relates to autonomous trucking, I think the first one is by the time you see Torc launching next year, we will have very good metrics around that TCO. And again, because we're not doing hand-built custom prototypes, right? We get to work with an OEM. We understand our supply chain through and through in terms of what it takes to build and manufacture these vehicles. And we can actually drive out all that true TCO. And when we think about TCO, right, we're not naive. It's not, well, there's not a driver in the truck and magically you make, X amount more money, right? You do still have things that come back into play. You have more data costs that need to be accounted for. You have the kind of additional operational support, and drivers do a bunch of other jobs than just drive a truck. And so where I think you'll find Torc to kind of continue to be that steady voice in the industry is really accounting for all those aspects. And I'd say, that's entirely on us. We have our Torc Autonomous Advisory Council, execs from most of your large trucking companies. They keep us honest too, right? That's not a group that you can, fluff the numbers with and have them, just accept it, right? They challenge us on every penny, and they keep us real honest. Everything from how it operates in the hub all the way through to what you need to account for, whether it's from insurance or other costs. So they keep us honest. They will not let us put out numbers that they don't buy into as well.
I mean, you get a bunch of fleet executives, they're new nonsense. They have been promised the world. I used to say growing up, if I could actually make the money that everybody promised, the fuel savings that they promised my father, Elon Musk and I might rival each other with all the false promises about all the fuel economy. The same thing with autonomous. It's obviously a very sexy technology. The challenge is you're dealing with the regulatory question that is going to factor into total cost of ownership. What is your perspective? I mean, if states are passing, California, I believe, passed a law, or at least teased a law, that was going to ban autonomous Class 8 vehicles. As we see more and more states start to worry about the human impact, the job loss here, how is that going to affect the commercial viability of this technology?
Yeah, that's always an interesting topic for us, right? And I actually really appreciated your interview with Brad Jacobs, right? That human nature is always to automate the repeatable tasks in our lives, right? And every time that's happened, more jobs have emerged because of it. And that's something that we truly believe, right? We operate down in Texas. We work on how does that scale out from a hub operations, from a mission management, from these other jobs that are going to emerge as a result of a more efficient supply chain. So I think that's one piece of it. The regulatory piece, and you asked about, the Build 250, I really like that there is a more consistent framework. One of the advantages that we have here in the US and hopefully can leverage to our economic benefit is a consistent framework, right? If you look at the viability of autonomous trucking in Europe, for example, the number of different countries you have to drive through to get a length of haul just across Texas is massive. And so the more consistent we can be here, the more we can collectively unlock that economic benefit. And what I think you'll see, though, is the states that lean into that, like a Texas, are going to see more and more of that benefit early on, hence why everybody's operating there today.
Can you describe for our audience what the Self-Drive Act of 2026 actually will do for autonomous?
So at a high level, right, it really just sets a consistent framework for reporting and transparency across the board. So they're still working through all the details of how that's going to be enacted. But again, as it reports to what you need to report and how you need to be transparent about that, that's huge for us.
I mean, how do companies like Torc and folks in the autonomous vehicle, and frankly, fleets that are going to buy this technology, how are they going to protect that investment when suddenly there's a change in politics, maybe not in Texas, but it could be in the state of Illinois or Missouri, where you have trucks that are passing through? How are they going to protect that investment to ensure that those trucks can truly be autonomous as they drive their state highways?
Yeah, and one that I actually, as part of this industry for a long time, think the burden starts with us, right? We have to prove that we are doing things safe, that we are doing them in a transparent way, that we are doing them in a way that we are worthy of operating next to the minivan going down the road, right? And I think that's a burden that, a lot of us in this industry understand and carry. And I'm in close contact, right, with a lot of our, what you'd think are our competitors, but we're also all in this together, and that we view there's a bar that we all need to meet to do this safely and earn that trust. It shouldn't be given, right? We do have to do certain things, and we do everything from training first responders all the way to working with the regulatory folks. How do we make sure that we've proven that we can operate safely, that again, we've earned our place on a public roadway? And as we do that, I think that's where you'll see a more, I'll say, consolidated regulatory environment. I think you'll see more buy-in from the customers and buy-in from the general public, right? That hurdle of trust is high. We know it's there. And the beauty of it is, from an autonomous trucking perspective, much like TCO, safety is also a data-driven activity, no different than in a major fleet today. And we take that burden very seriously, but also leverage data to actually answer those questions.
Andrew, thank you. We could certainly ask you a lot more. This has been really informative.
Gotta have him back.
We hope to have you back. It's been a great conversation.
I also want to hear from, we asked the question of the day. I think we should extend it. You can tweet us at FW Today with a hash mark. Do you think that autonomous trucks should be allowed across border? Because it strikes me, so many people have an opinion over Mexican trucks coming into the United States. The very same people have opinions about autonomous trucks. You got to pick your poison, if you will. If you argue that having Mexican trucks are breaking cabotage and shouldn't be here in the United States, how do you argue against autonomous trucks across the border? I don't know, Andrew, last thought, closing thoughts on that. I'll let you take it.
Look, I think at the end of the day, the demand is so high, the tools in the toolbox need to be utilized to benefit the economy. And how we make those work, how we fit into the existing freight network or augment that freight network is one that, between the technology and products we bring to the market, the great folks that actually work day in and day out in Laredo, they're going to be the ones that really drive that. We think we just bring an amazing tool that they can leverage to unlock that value.
All right. Thank you so much, Andrew. We're going to take a quick break, and we will be right back with Dr. Stefan Heck from Nauto.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
map is changing. As global uncertainties rise, the future of the supply chain is moving closer to home. Welcome to the new coast-to-coast North American network, driven by massive reshoring trends and next-gen industrial innovation, optimized by AI workflows that build unshakable operational resilience, and locked down by proactive security against evolving freight fraud. Are you ready to navigate the shift? Join the industry's top minds to build the future. The FreightWaves Domestic Supply Chain Summit, streaming live June 17th. Register for free at live.freightwaves.com.
Fleet insurance costs are climbing, nuclear verdicts are up, and AI dashcams are everywhere. But most fleets are still buying them like commodity hardware. A new Virginia tech study says that's a problem. Here to explain why is Dr. Stefan Heck, the CEO and founder of Nauto. Thanks for being here.
Pleasure to be here. Thank you.
So if you think that these purchases are being looked at in the wrong way, what questions should people be asking, and how should they be looking at purchasing these dash cams?
Yeah, a lot of people just ask, I need a dash cam or I need an AI dash cam. But if you're sophisticated, you actually drill underneath what is in the AI. And let me give an example. AI can predict what's going to happen, so it can actually give you 3, 4, 5 seconds to prevent a collision, or it can simply detect a collision after the fact. Huge difference there, right? In one case, you're getting reporting and you're seeing somebody got into a collision. In the other case, that collision never happens and you're avoiding it. Accuracy also matters. Some of the systems out there, quote unquote, have AI, but they have 50% accuracy or 60% accuracy. That means every other alert is a false positive, and your drivers are going to get really upset, and they're going to start ignoring the system. A good system will have 99 point something accuracy, right? 99.6, 0.7. So you'll have 1 in 100, maybe 2 in 100 false positive alerts. Very, very rare that you'll get a false alarm. That's really, really critical. And the Virginia Tech Transportation Institute study that you mentioned looked at different systems and actually highlighted a third difference, which is some of the systems take 10, 15 seconds to detect the danger. And we all know if you're driving on the road, 15 seconds is an eternity. You might have crashed, you might be killed by the time 15 seconds goes by. So having that accuracy, but also the speed of detection and being able to tell you in advance is critical. Give you another simple example. A lot of dash cams out there report when you've run through a stop sign. They just detect that you didn't come to a stop. That's looking backwards, right? I just ran a stop sign. What you really want is predictive stop sign intervention. It sees you coming up on a stop sign. The driver's looking down at paperwork or their phone or whatever, doesn't see the stop sign. You get a warning before you run the stop sign. That's great for the driver because now they never run a chance of getting a ticket, having a collision. So you're, no harm, no foul. You're actually preventing a safety incident before it happens.
Yeah, which obviously is incredibly important. Part of that is also driving. So what do you guys do to alert, prevent, track that in cab as well?
So at Nauto, our goal really is to inform the driver in real time. And the goal is not to tell the supervisor what's happening, but to warn the driver with 3, 4, 5 seconds left on the clock to do something about it. So we're giving the driver a heads up on things they don't see. Now, if they're already stopping because they see the lead vehicle braking or they see the stop sign coming up, we don't intervene. That's fine. That's great driving. But if they're not slowing down as they come up on a vehicle that's braking or a red light or a stop sign or pedestrian crossing, that's where we intervene. We call those preventative predictive collision alerts. You're predicting the future and you're preventing an incident before it happens. Drivers love those features because unlike dash cam, which usually means video recording and somebody else sees what's going on, this is just a co-pilot warning system in the vehicle that's keeping you out of trouble. And in our system, if the driver responds to the threat, that's it. There's no further consequence, no video is uploaded. And so you're really just uploading video when somebody else hits you and you need that video to exonerate, hey, that collision was not my fault. That's the big difference. It's that prediction and prevention The other unique thing Nauto does, as you mentioned, we look both at what the driver's doing, where the driver's looking, and what's happening outside. Because a simple mismatch can be very dangerous, right? I'm looking right, but the danger's coming from the left. Now suddenly I'm in an imminent collision situation. So we're looking at where's the hazard outside relative to what the driver's paying attention to.
So I've got two questions. One, how is this different than other collision mitigation technology? Does it just alert the driver before it happens, or does it actually intervene and, let's say, start the truck braking?
Yeah, so today there's some overlap. If you've got a forward collision warning ADAS system on your truck, that detects a narrow set of dangers right in front of you, right? There has to be a vehicle, and the latest system's a pedestrian, but usually it's just the vehicle in front of you. And as you said, it will stop the truck. Our system today is an aftermarket system, doesn't stop the truck, but gives you warning earlier, and also sees a broader range of risk factors off to the side, sees the combination of, are you looking at the road or not? So if the pedestrian started crossing, but you're still far away, it will still warn you if you're not looking at the road at all. Our built-in generation, which is in development and will launch soon, that will actually have the capability to also stop the truck. We're working with the vehicle manufacturers to do that, because you don't want to hack into a vehicle system and override the control. So we're doing that in collaboration with the vehicle manufacturers. Then you're getting the best of both worlds. You're getting that 360 context awareness, not just narrowly what's on the road ahead of you, and you're getting the ability that if the driver doesn't respond themselves, you still have that backup of stopping the truck. By the way, let me mention one other thing there. If you look at expert drivers, we have a lot of world-class professionals. They generally don't brake, they actually swerve. And for most circumstances, like a vehicle in the lane in front of you, a pedestrian off of the side of the road, swerving just a little bit, 3 feet to the left, change one lane to the left, is a much better, much safer response than jamming on the brakes all out. So what we're headed for is a system that can actually make that kind of lane change as well, as opposed to just triggering braking like today's safety systems do.
Now, this is true in heavy-duty trucks. Is it also true in automobiles where consumers are swerving that have more experience?
It's true in automobiles as well. We have expert drivers who haven't had a collision in decades, and they tend to swerve as well. On the other end of the spectrum, the worst drivers we see have 3 collisions per year. They tend to be on their phone all the time, and they don't even brake because they don't see what's coming. So,
wow, that's unfortunate. I got to ask, swerving to the other side is basically keeping your blind spots aware, at least aware of what's around you. Dash cams are forward-facing. What are you guys doing to really improve that envelope to help the drivers to ensure if they do swerve in the event of an accident that they're safe? Are you building any technology for that?
Absolutely. So our system today has about a 90-degree forward and side and a 90-degree inward and side. But we are right now in the first deployments of a 360-degree system. So that's looking all around and can also pull data from the vehicle. So if your vehicle has additional sensors like a radar or ultrasonic sensors, you can integrate that data as well. And when we talked about the built-in next generation, that's not commercialized yet, but that's in development, but that will actually take advantage of all the sensors on the vehicle. So you get a true bird's eye 360 view for the driver, and also the safety system is looking at full bird's eye view and sees everything around you.
So I love that this is almost like real-time coaching for the driver with the alerts. That being said, it is an inward-facing dash cam. Obviously, that is a hard sell for a lot of companies to their drivers. So how do you overcome that? Is it that you don't send the videos unless there's no response to the alerts? What are best practices for sort of overcoming that objection and the uncomfortable nature of that for drivers?
Yes. So, we get that question a lot, and really there's 4 options. The first one, the default that many systems do is you're only uploading recording when there's a safety event. In our data, we see that's about 1% of your driving time. So a lot of drivers are worried, is it recording me on brake? Is it recording me when I pick my nose? The answer is no, unless you get into a crash or a dangerous situation. But that's kind of the standard generic, AI dash cam setting where you're still recording, still uploading data. We have 3 other options on top of that. The first one is, as you mentioned, you can set it so that the driver only gets the feedback and the supervisor only gets a heads up if something really serious happens, right? If the vehicle crashes and the driver got hurt and needs help. We also have a mode where there's no interior recording at all. Now that sounds counterintuitive because people always think dash cam means CCTV camera that's recording. But the reality is you can run the AI only on the inside, and it's giving the driver's warning, but there's no recording. So the beauty of that is the driver has complete privacy. They still get the collision avoidance warning. They get the prevention, but there's no upload. The last option is you can actually send the data when there's a safety event only to a specific person. So we can do that to the immediate supervisor. We can do it to a safety coach. We've done it where it just goes to the union or the workers' council. So the supervisor never sees it, can't be used by management, but is able to be used by coaching. And we can also do it just to the driver. So the driver can see after the fact, what did they do wrong? How could they get better? But it never goes to a boss. So the beautiful part about true AI that's running in real time is you don't need that upload. A lot of systems are cheating. They're really uploading video and then running AI in the cloud after the fact. At that point, you've uploaded data and you have the privacy trade-off. So we sit down with the drivers and with management in the fleet and co-design what's the right set of settings. What do you want to see uploaded? What should stay private for the driver? And we've got a whole range of options there, all the way from just event-driven to literally zero video ever. By the way, a lot of our fleets in Europe, given the GDPR rules there about driver privacy, operate that way. But we have US fleets that have chosen those settings as well, where there's no video on the inside at all. So that dash cam concern of am I being recorded doesn't actually have to be that way.
And I imagine that based on the settings, there is an alert. Like I know that our drivers, there was a noise if the dash cam came on and began recording, so they were aware of it. We did not have internal facing, but I will tell you with external facing cameras, you can still tell a lot about what is going on in the cab via reflections and what you hear without some of those, privacy settings you're talking about and the ability to set different levels of what is actually kept and retained.
Stefan, I'd love to get into some of the data specifically about what you can learn. What is some of the data telling you that's picking up in terms of behavior? What have you learned, most importantly, that surprised you based on using this data versus sort of accidents or safety culture?
Yeah, that's a great question. And we talked about the first one already, which is there's a huge spectrum of skill out there, right? There are drivers who are masters who have driven for decades without ever having a collision. And there are people out there who will have several collisions per year. The average human being has a collision once every decade or so, every 10 years. So that you have to factor in. There's going to be some drivers who really don't need a safety system other than to exonerate them when somebody else hits them, because that can happen to an amazing driver, right? You can get rear-ended and you can't do anything about it. In that case, having the AI dash camera just provides a record of what happened. Secondly, if you look at the kinds of risks, there's really one risk that dominates everything else, and that's distraction. We see that 70% of all collision damage is caused by distraction. Most of that is electronic devices, tablets, phones. A lot of people have a phone for the company, have a personal phone, sometimes have a tablet in the truck too. So electronic devices really are the number one killer on roads today. If you look at government data, police reports, insurance data, speeding will be the biggest cause. But that's because police officers show up at the scene after the fact. Unless the driver confesses they were on their phone, they will never know. And so speeding gets over-reported, distraction gets under-reported. Very interesting, if you go beyond that, it's much more variable. So distraction is the number one driver of collisions for everybody. But after that, it really varies by fleet. For some fleets, it's speeding. If you're driving a lot on rural roads, for example, you get a lot of speeding. If you're driving in off the beaten path, you get animal strikes as a big cause of damage. In urban areas, the biggest driver loss tends to be pedestrian bicyclist collisions. There's a lot more people around, so if you're driving in a major city, pedestrian strikes are really by far your number one cause of damage after the distraction. And then if you're driving overnight or your drivers are doing heavy work as well, we see this, for example, in landscaping fleets where people are digging trenches, hauling stuff, or construction fleets. You'll see the drowsiness becomes the second biggest risk. Now, it's interesting, though, distraction tends to be almost everybody. 85% of drivers are distracted at least some of the time. Some drivers are distracted nonstop. It would shock you. We have fleets where there's 23 distractions per hour. That means they're distracted, every 3 minutes. But if you look at drowsiness by comparison, it tends to be a small percentage of drivers. So in a typical fleet, 1.5%. In a fleet driving overnight, it might be 10% of your drivers that have drowsiness. So you're really solving a much more laser-focused problem on how do I help those drivers that are getting drowsy. And interestingly, unlike distraction, right? Distraction is just a choice. I can use my phone or not. I can put it away immediately. So feedback works because I get feedback, I put the phone down. I can't will myself awake the same way. So that's more a problem of what shift am I assigned to? What did I do last night? And we see for a lot of people, it's something else in their life, right? It might be completely innocent. They just had a young baby. They're not sleeping at night. It might be a medical condition they have. So we work very closely with the safety team to help drivers where we're seeing that drowsiness. Because if you're one of those 5% of drivers that's drowsy, that is going to kill you. We looked at this in a very large fleet. We identified 155 drivers that had drowsiness issues. The fleet didn't get to all of them right away. The ones they didn't get to, they all had a crash in the next 6 months. So it's really, if you have a drowsiness problem in an individual, you've got to act on it. Otherwise, distraction's really your number one killer.
I mean, I think tiredness is equivalent to being drunk. I think there's a whole bunch of studies. You would know this from Stanford. Just how bad that is. But you talk about device distractions. How are fleets really, I mean, I understand the importance of that and the impact of it, but how do they really govern that going forward? Are there policies in place that they're implementing as they take this data and to really affect it? How do they encourage someone who's on the road, whose job is to drive trucks, that they can't be on the phone for 11 hours a day?
Yeah, it's interesting. When we go into a new fleet, they usually say, hey, we have a zero tolerance policy. We fire anybody who uses their phone, right? You're nodding your head. You've seen that before. First thing we do is actually we say, you got to suspend that policy for a month. And it sounds counterintuitive, right? I'm going to suspend my zero tolerance policy. Well, the reality is when we go into a new fleet, on average, we're seeing 7 distractions per driving hour for every driver. So that means if you stick to your zero tolerance policy, you're just going to wind up firing everybody, which is not realistic. The reality is almost every driver uses their phone occasionally. And then you see drivers who are constantly on their phone, right? They're watching a movie, they're on Facebook. And so the question is, how do you become aware? We surface how often each driver is distracted. They get that in their own report. They get that in their scoring. They obviously get the real-time feedback. By the way, we don't use beeps and weird sounds. We use voice coaching because it's much more natural for the driver. We also do all the coaching positively. So if you're using your phone, it'll say pull over to use your phone, which is the correct thing to do, rather than saying, bad driver, you shouldn't be using your phone. We find that if you do the positive thing, people will start actually looking for a place to pull over. There is an underlying need, right? Something's happening that's making them want to look at their phone. And so if they have that need, you've got to find a way to do that safely. And what we find is if you're giving the driver that feedback, 85% of drivers will self-correct. Because most people will, when you ask them, hey, how often do you use your phone? If they're honest, they'll say, I touch my phone maybe once an hour. But again, it's 7 times per hour in reality. You will have some outliers, right? There's some people who are just addicted to their phone, addicted to Facebook, addicted to WhatsApp, whatever it is. And those people, it is an addiction. You've got to work with them to overcome that habit and get them to put the phone away. And you see that after a couple times of feedback, sometimes it does take some manager intervention to say, look, here's the scary things that happen when you're distracted. And we have plenty of examples of how serious that can be. Then you do see the drivers, they get that reminder, the initial nudge, and you can see them put their phone away immediately. And that's exactly what we want, right? They're tempted still, but they remember when they get that intervention.
Stefan, sorry.
No, you go ahead.
I want to ask one final question. So I want to be totally clear. So the fleets that are enabling this, are most of them actually sharing this data and this reporting specifically with their drivers rather than only with their driver managers? I think that's a huge distinction and incredibly important.
For us, it's a fundamental philosophy. The driver should not only know, but they should know first.
Yeah.
Right? The driver should get the feedback first, should be aware of what's happening, should have the chance to self-correct. That's what we want. These drivers are professionals. Nobody wants to die on the road, right? They're professionals. They know what to do. Unlike working with teenagers where they don't know how to drive, every CDL driver knows how to drive. So the question is, what are you not aware of, right? And the dangers that drivers take are things that they're not aware of. They don't run stop signs deliberately. They run them because they didn't see them. Or, they're drowsy because they didn't realize they had sleep apnea, or, they had a terrible night of sleep, and so they're drowsy on the road. Same thing with distraction. People don't even realize how often they touch their phone. So it's bringing that into awareness and letting the drivers change. And then in our system, as I said, it's configurable. What's the threshold for something to go to a supervisor? Is it only a crash? Is it serious risk behavior? Is it the drivers that do repeat risk behavior, so they're not self-correcting? That's all configurable. And that's really a backstop for if the driver is either deliberately ignoring, which we see about 1% of drivers who are deliberately ignoring alerts, but most often it's something else in that driver's pattern. I'll give you a real example. We had a driver that tailgated all the time. It turned out in his safety training, he had misunderstood the rule. He thought it was 3 car lengths rather than 3 seconds. And of course, at 65 miles per hour, 3 seconds is a lot more than 3 car lengths. So once he understood, I learned the wrong rule, he immediately adjusted and the tailgating went away.
Amazing.
That's great.
I love technology that makes the road safer. This is great.
This is great.
Stefan, I got to ask one last question. I'm going to take one more because you're just an amazing resource. You came from Stanford, you were at McKinsey. Give us, in 10 seconds, what is the biggest surprise about trucking that you've gained since you've worked in this industry?
Just how exhausting and hard a job it is. People say McKinsey is a hard life because you're on the road all the time, away from family. Trucking's worse. You're working long hours, you're lonely, and so I have a lot of respect for drivers. It's an amazing, service they're providing for everybody in the country, right? We all depend on it for food, for groceries, for everything. And so I have a lot of respect for people who are doing it, for years and years. It's a tough job, so impressive.
Interesting. We're going to hear from another consultant here shortly, and we'll see how hard his job is. He's with AT Kearney. He's going to give us the State of Logistics report. Something he wrote. It comes out every single year. We're going to hear right about that right after these messages.
It's National Safety Month, which makes this a great time to ask how your fleet can prevent more accidents. Samsara AI detects risks in real time, giving teams more visibility into what's happening on the road and more context to coach drivers before risky moments become incidents. Fleets using Samsara Complete AI Safety Solution have reduced crash rates by nearly 75%. See the data behind the results in the Samsara Safety Report at samsara.com/freightwaves.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
Every load you move depends on one thing, knowing who's on the other side. And Highway gives freight brokers the carrier identity tools to verify carriers, secure the load, and book with confidence. The performance guarantee puts up $100,000 behind that promise. Real money behind the standard. No other freight technology company has made that commitment. This is, again, Highway, the standard for carrier identity.
Welcome back to FreightWaves Today. We have an amazing show lined up, and we're not going to miss the next beat. It is the annual State of Logistics Report that is brought to you by the CSEMP, AT Kearney, and Penske. And here to talk about that report that is obviously sets the tone for the entire year is Korhan Ekar. He's with AT Kearney. He is the author of this report. Welcome to FreightWaves Today, Korhan.
Hi, thanks for having me.
So let's talk about the State of Logistics Report. It's something that I read every year. It's something that you guys have done for many years. What is the purpose of this report? What's the primary motivation to actually publish the State of Logistics?
The purpose of the report is to, well, first of all, gather the information in the marketplace, both on the shipper and carrier side, and really understand what's going on in the industry. As you know, transportation or logistics more generally bears a big weight in our economy, and it's usually typically a leading indicator on the activity in the economy, and that's why we look and watch for certain clues in it. And the job of the report is to really gather those clues and pass it to the audience in an understandable way.
So one of the big takeaways from this report is that logistics costs actually dropped this year. An unusual development in an industry that's continued growth. Is that just related to the softness of the freight market, or is it really related to the impact of the Liberation Day tariffs and just sort of a pullback in goods movement?
Well, softness of the freight market definitely has to do with it. One of the largest contributors, the motor industry, the trucking industry, it was a very silent market in 2025. Toward the end of it, there was a little bit of a pickup in the spot market. But other than that, it's been a wildly slow market. So there were no contribution support from trucking over the road into U.S. business logistics costs, like in terms of expenditure expansion. And then that was also supported by a huge drop in rates for ocean, which is the second largest bucket in the U.S. PLC cost. And now you have a neutral component and a negative component. And then if you look at all the other modes, they're either neutral, showing very modest increases, but nothing to make up for the losses on the ocean side. So all in all, the expenditures have dropped as a percentage of the nominal GDP.
So you mentioned that obviously we've been talking about a lot as well, that we're exiting this downturn, but it's not demand driven, it's supply driven. Can you give us your take on that?
Yes, this is, I mean, we're seeing rates slightly start to become inflationary territory. But the reason for that is, as you said, is not demand increase. The reason for that is we're seeing an accelerated exit on the capacity side. some of the owner operators, especially with they're a little bit more sensitive to increases in fuel prices, for example. And that's why the acceleration of exits on the owner operator side impacted the supply end of things. So that kind of formed a floor, and then very gradually an improvement environment for rates. Now that is not a demand-driven supply-demand change. It's a capacity-driven, supply-driven change. And that is why until we see demand pick up for whatever reason, we do think that recovery will continue to be very slow and very elongated.
Well, and one of the things we do pick up in the data, at least our high frequency data, is the industrial are starting to sort of see some activity. As you guys looked at this report, I know it's sort of backward looking, but also does make some projections for the future. What are your thoughts on reindustrialization or in terms of just ensuring that your supply chains are resilient? How are companies thinking about repositioning their supply chains more towards the domestic U.S. market, or at least the Americas?
Well, resilience is the hot topic this year, and it was in a similar way last year. But this year, we called the report "Forge and Disruption," and the reason for that is we're gaining a lot of resilience in a world of turbulence and volatility. And the volatility is not there isn't a single cause for volatility. You have to deal with trade policies, inflationary cost environments, geopolitics. And then last but not least, the adoption of AI. So we think there are four components of disruption. And these four components make the disruption a permanent state. And now the question becomes like, how much resilience did we develop within that disruptive environment? And the answer to that, we think, is yes, industries have developed both on the shipper side and the carrier side a lot of resilience, and that's why we call the report "Forged." Right, that word itself has a lot of association to resilience. Now, industry is doing this with enhanced collaboration between the shipper and the carrier. So there's a bigger, better formed partnership that's taking place. That might be in the form of sharing more data, more visibility for each other, and so on, making plans together. But the other component of all this is AI. AI is really taking the burden of the transactional layer of logistics, and with the time it saves, then companies are investing it into relationship building, resilience, being more agile, being able to make the right decisions fast enough so they actually stop the bleeding in time, especially when geopolitical events happen.
So obviously the report is about persistent disruption and it not being cyclical, and out of that came 5 strategic implications. I'm going to read them so I make sure I don't miss them. But it's design networks for resilience, not just efficiency, prioritize asset productivity over footprint expansion, embed trade compliance and geopolitical intelligence as a competitive capability, accelerate digital and automation ROI, reassess capital structure and investment pacing with the emphasis on shorter measurable payback periods. So of those 5 strategic implications, which do you think are the most important to prioritize first, and what should people get started on doing right now?
Practically speaking, so I'll give you twofold answer. One is from my mind. Practically speaking, building resilience and being able to deal with changes in the world. Every organization needs to invest toward that. I mean, that's no longer a nice to have; it's a must have. But secondly, coming from a digital practice originally, I do believe AI and tech investments around AI are going to go a long way, not only to build resilience, but also to bring productivity. So three of the components in what you listed are actually interconnected. And AI, I see that as the enabler for the other two. But building resilience and really doing that using AI to bring productivity and resilience into organizations looks like is going to be the go forward theme on the agenda of Chief Supply Chain Officer.
So when we think about AI, it's obviously been something that's top of mind. It feels like we're very early in that journey. What are the most successful implementations of AI? There's so much money being spent, but the results are really mixed. Where do you guys see the biggest sort of lift and impact short term for AI's impact in logistics?
Mm-hmm. Yeah, there's two application areas. The first one is physical AI. And we should talk about that because that's very relevant for the logistics industry. For example, autonomous vehicles. This is becoming a reality. And hopefully with the passing of the Autonomous Vehicle Acceleration Act, there will be federal governance over this, and it will be easier to underwrite the insurance as well following that. But the technology is there. We have talked to several companies that are already operating in multiple states, and they're doing mostly where it's practical is middle mile. So think store deliveries from the DC and so on. Very high volume, consistent kind of transportation. So that is identified as a very successful first segment of transportation that autonomous vehicles are making a lot of sense. But as AI, these vehicles even learn more. It's just going to get better and better, right? And once it is regulated federally under the Autonomous Vehicle Acceleration Act, then basically we're going to see an acceleration, as the name suggests, in the industry. That is important for the industry for multiple reasons. But the first one, obviously, is the cost. But secondly, it is essentially addressing the driver shortage problem, which has been a long-standing pain point for U.S. transportation industry. And if you could take a little bit of the burden from the driver and make that autonomous, that's going to go a long way in all aspects. So that is the physical AI, and there's also inside the warehouses kind of productivity with the humanoids. I think that's still a concept that's becoming real. I wouldn't be able to say it's here today. Technology is here, but there's still a lot of scaling type of aspects of it that need to go through maturity phase. But once it comes, of course, that's going to completely change the labor and operating models inside the warehouses. So those two are the physical AI aspects. But then there's the agentic AI, which I personally think going to be a big, it has a big impact on U.S. logistics. Why? Because a very significant portion of U.S. logistics is very transactional. So the day-to-day life of a logistician consists of, making phone calls to the supplier, making phone calls to the internal stakeholders, dispatching loads, tendering, procuring. A lot of repetitive and transactional layer happens in logistics. So if you could automate those workflows through agentic AI and really, when you wake up in the morning, the AI has already done the work for you. It will have a significant impact on where people spend their times. And people will be spending their times in more value-added, strategic tasks rather than just chasing loads and and making connections with the suppliers. So that I see as a huge contribution and benefit to logistics, just the replacement of that layer with the agentic AI. It's going to change the way we do things. We think a little bit differently. I do not think it's going to be a direct replacement for jobs, because it's still the people that needs to bring context into AI. I mean, that's a very important part of this equation. Is AI by itself is not going to bring context. There needs to be supply chain knowledge that then makes the AI and the way it operates very useful. So in the short term, I think it's repurposing of that workforce, but both in physical AI and agentic AI layers, which are around automating workflows, there's going to be significant contributions into logistics industry.
Great. So the report certainly talks about the state of logistics at the time. What is your take on what the rest of 2026 looks like?
We've already seen at the beginning of this year, for example, we talked a little bit about the truck rates, and the last 6 months of the rate trend was actually a little bit more inflationary than last year. So you're seeing a little bit of an acceleration in rates and the inflationary environment. I think we need to look at this mode by mode. Every mode will react differently and have its own story. But generally speaking, I think this elongated recovery cycle, because we're at the beginning of a new freight cycle, just the duration of it will take some time to really to recover, unless we can identify a demand catalyst for it, which you will see in the report as well. We don't necessarily have identified a near-term demand catalyst that has to be discovered, and once that starts contributing, I think the cycle recovery will accelerate. But all modes, capacity will be somewhat sufficient, and on the pricing side of things, maybe a gradual recovery is what we expect for the rest of the year.
Well, Korhan, we're out of time. We'd love to continue to follow the story and have you back next year on the state of logistics. And I imagine the logistics industry is growing just through price inflation. Everything is price inflation for freight. That's a great thing. We'll have you back. Thank you so much. Check out the report. We have the link on FreightWaves.com. We'll be back right after this to talk about foreign trade zones.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The map is changing. As global uncertainties rise, the future of the supply chain is moving closer to home. Welcome to the new Coast to Coast North American network, Driven by massive reshoring trends and next-gen industrial innovation, optimized by AI workflows that build unshakable operational resilience, and locked down by proactive security against evolving freight fraud. Are you ready to navigate the shift? Join the industry's top minds to build the future. The FreightWaves Domestic Supply Chain Summit, streaming live June 17th. Register for free at live.freightwaves.com.
Julie, this is our international segment. We've really gone all over to the macro, talked about drivers. We're now going to talk about foreign trade zones.
Yep.
Obviously a hot topic. It's interesting. I was in, air freight, airport to airport freight is where I started my career, over 25 years ago, 27 years ago. And I heard a lot about foreign trade zones being an airport to airport. And then I never heard it again. Container freight stations, all that fun stuff. It has now become a hot topic because of all the trade policy. And here to talk about that is the CEO of IMS. IMS Worldwide is is going to talk about foreign trade zones. The CEO, Curtis Spencer. Curtis, welcome to FreightWaves Today.
Thank you very much, and welcome to my locked up shoulder here. I just had shoulder surgery, so it's been a crazy week.
Well, so you're locked up. You've got nothing to do but talk to us. We appreciate you spending your time with us. Tell us a little bit before we get started about IMS Worldwide. What do you guys do for clients?
So 45 years ago, I joined my dad, and he was in the petrochemical site selection business. He came across this law that allowed for duty-free treatment of imported raw materials. He said, oh my God, that's perfect for my customers. So I started working for him 45 years ago. Fast forward to today, and IMS Worldwide Inc. is 30 plus employees and contractors. We've got 4 locations besides our headquarters in Houston. And the foreign trade zone business, because of the size of the tariff, has just blown up. It's absolutely blown up.
Now, in the post-SCOTUS world, where SCOTUS has had two hearings, one got a lot of attention.
Correct.
It's the Liberation Day tariffs. Is there still demand for foreign trade zones, or have companies sort of reevaluated that?
So yeah, here's what really happened. In the beginning of the IEEPA tariffs rose really high to about 30%. And then they settled back down to 25%, and then went back up to about 50%. And then SCOTUS had its ruling, and now the IEEPA tariffs are gone. But Trump and Biden had the 301 tariffs specifically for China and other very specific companies, but they weren't, quite frankly, they weren't as utilized until we got to Trump 2. I call it Trump 2 because that's when he started putting on the extra tariffs. So to shake it all out and kind of, you can cuss and discuss what the tariffs are going to be for 55 hours and not get it right. So here's where we think it's going to come down to. The average tariff rate before Trump won was 2.5%. The average tariff rate today, second half of 2026, is and will be right around 20 to 25%. Well, what you have there, Craig, is you got a 10%, a 10x jump in your average tariff rate. So whereas foreign trade zones made a lot of sense before Trump won, they make 10 times as much sense after Trump won.
Well, I imagine that's really driven up inflation. I mean, it made your business far more valuable in this environment than it was before. Is that changing the way investors are thinking about investing in foreign trade zones?
Oh, 100%. The largest real estate investment trusts and the financing organizations behind developers are using the foreign trade zone more and more and more to get set up for their buildings to be able to handle a foreign trade zone user request. They absolutely see it and love it. Sorry.
No, I'm sorry. Go ahead. I'm sorry.
No, I'm good.
Okay.
I'm good. Yeah, we see a lot of infrastructure plays like that.
I want to back up actually a little bit for some of our viewers who are not as familiar with this topic and talk about what does a foreign trade zone actually do. And then we got into a little bit about why the math works better now. And if it's 2.5% now to 20 to 25%, the math makes a lot of sense. And I want to talk about this piece I read about the math as well. But first, can you just give us a little bit more background on a foreign trade zone,
Sure.
what it actually does?
What they do is they give you 4 very, very significant benefits. Duty deferral. When duty rate was 2.5% and my interest rate was 5%, duty deferral is not a big number. Today, the interest rate's 7.5%, and my duty rate is 10 times what it used to be. So if I defer that duty for a small amount of time and then annualize that with the cost of money, I got a big number. Second, exports. I don't pay any duty on goods that I bring in, merchandise that I import, and then re-export, never pay a nickel of duty. When that duty rate was 3%, 4%, and I only export 2%, that's not a lot of money. Today, even 1% of a 35% duty rate being eliminated is a huge benefit. Number 3, scrap, waste, return to vendor, obsolete. Don't pay duty on that. Same as exports. And then the 4th big benefit is merchandise processing fee, which is your fee to submit an entry to customs. That fee is now over $635 per entry max. So if I'm doing 100 entries a month and I only have to pay 4 times that $635 versus 100 entries times $635, I'm saving hundreds of thousands of dollars a year. So those are your 4 real basic manners of savings, profit enhancements in a foreign trade zone.
Curtis,
and quite frankly, it's ginormous money. It's millions of dollars.
How much does the change in de minimis, the impact of the removement of the de minimis exemption, really impacting the desire for retailers and importers in terms of looking for FTZ?
If customs had been smarter about it in the beginning, it would have impacted it a whole lot more. As it stood before de minimis got killed, there were very few foreign trade zones using de minimis, very few, because you couldn't meet the criteria of de minimis in a foreign trade zone. So it really didn't hurt foreign trade zones. It changed a whole genre of warehouse occupiers. Now you had a whole bunch of Chinese 3PLs that came over and started leasing space. CBRE had an analysis that in 24 and 25, over 30% of all the new leases were Chinese 3PLs. Well, who were they holding goods for? Temu, Shein, TikTok, and the like. So that change in the de minimis really increased the use of warehousing by those 3PLs.
Yeah, it's amazing. I wrote a book about and really focused. The time I wrote the book, de minimis was a thing, and then by the time it got published, it wasn't a thing. The interesting thing that I just drew from that is how much of an advantage we gave these foreign companies.
Yes,
and
sir.
In the old days when you bought something online, you would go and you would clearly read it was in Chinglish, and you're like, I don't know that I want to buy these products because I don't know that I could trust the counterparty. If something happens, I'm there. However, with AI and including TikTok, the algorithm, one of the things that has been pretty profound is the TikTok algorithm combined with AI was these Chinese brands, these direct consumer brands on the Temu and Shein platform were effectively going out and looking exactly like American brands using the same language, very similar product, and maybe even coming from the same producers, the wholesale producers offering the same products, undercutting American businesses. It was one of the most absurd things that we allowed in trade policy. So we talk about the negative impact of the tariffs and how much that has impacted businesses. This was one that I had a hard time really supporting the de minimis exemption when I realized how much damage it did to the American economy and how much more favor it had for foreign companies.
Man, you are so right. Let me tell you what, I was part of the COAC committee when that first came to light, the request by the forwarders and global forwarders and NVOs that wanted to get this done, the air freight community. And at first, it seemed like an advantage for customs. I don't have to file an entry on things that are, only $250 or $300. And then they pushed it up to $800. And I started to think to myself, when you buy something online, let's say it's a beautiful wedding dress, and it's $1,000 for that wedding dress. The price of that wedding dress coming across the border may only be $200, may only be $300, $400. So even though the retail price is $1,000, the price that would have allowed you to accommodate that under a total duty-free status, you were going to make that $800. You were going to be below that. So de minimis was really, really negative to U.S. retailers.
I mean, it's a racket. A lot of these companies, you think about it, they were undercutting not only our manufacturers, they were undercutting Walmart, they were undercutting Target, Amazon. It was a complete disaster. Here's a really interesting thing, as I wrote in the book, is there was a Peterson Institute study, and I found this was really interesting, specifically about TikTok, which was at one point owned by the Chinese government, or entities owned by the Chinese government, found that Chinese products appeared 40% more in TikTok's For You feeds than U.S. brands like Gap or Target. And there were multiple cases of Chinese brands that basically, using the algorithm and the data, were basically undercutting American branded merchandise, sounding almost exactly like American brands, using AI to look and appear like American brands. And it's one of the travesties of American law that we allowed that to happen.
Where did they learn that? Craig, who used to do that to all of the American brands?
Well, and Walmart, American big box retailers, Walmart, and look, Walmart is the 5th largest trading partner for China as a country. And
yes,
but in fairness to Walmart.
But Amazon is where they learn to move their goods higher up in the picking order.
For sure, but in fairness, Amazon employs millions of Americans. They are one of the largest real estate owners in the United States. They're one of the largest transportation providers. Walmart, is the largest employer outside of the federal government and may even be bigger. Those are American jobs. These are American businesses, American wealth being created. I have a hard time.
I'm 100% on your side. I totally agree. They should have never allowed the de minimis to be that high and that surreptitious to the laws. See, because even the 301 tariffs, they were allowed to go through without even paying the 301s. So,
well, Curtis, the other problem here is that what China did to American manufacturing, which we always were a retailer, essentially a merchant nation. We were founded by merchants. We were a merchant nation. American retail was something that we, regardless of whether products were manufactured here, American importers were driving retail sales. But because of de minimis and because of TikTok and AI, these Chinese companies, which are still Shein and Temu, still have presences on these platforms, are still undercutting American businesses and are destroying a lot of American discounters. Look at Dollar General. Look at how poorly they have performed. It's an absolute travesty. So we're talking about the importance of trade policy and what it has done to American businesses. Let's talk about how American businesses can win again. I'd love to hear what you're thinking about in terms of advising American businesses and how they can declare victory over these interlopers that are infiltrating our system.
The 3 things that I would come up with very simply is use the laws that are available. And FTZ, Foreign Trade Zone, is available to every company in the United States. And there's now, because of this administration's bent towards American companies, a view towards American companies to be the basis of how we grow our economy, there is a preference given to them on foreign trade zones. Take advantage of it. It's just like a tax break that you can take advantage of. Your CPA brings it to you, take advantage of it. Number 2, supply chains are starting to really feel the distances and the just-in-time failure that the world global economy has. So bring it in. Let's get closer to the United States with all of our supply chains. And I think you guys have been reporting on this for several years, that the supply chains are starting to realize you cannot have just in time outside the four walls of the United States. It just doesn't exist. It's not reliable. You know, we've got wars, we've got the closing of waterways, we've got natural disasters. All of those things affect our ability to have just in time. And then the third piece, I think, is look to the incentives that are being given locally by local communities and take advantage of all that and then grow your American footprint.
Curtis, you bring up an interesting point. We talked about the State of Logistics report, Julie, the fact that resiliency is the most important factor.
Amen.
And when your supply chain is coming from single source from China or even Asia, you're exposing yourself an enormous amount to geopolitical disruptions. And we found container ships in the Middle East. You've seen what the Houthi did. We saw what Hormuz did. If you think that Chinese planners are not looking at what happened in the Middle East and not thinking about that in U.S. Container-bound freight, remember, only 30% of containers bound for the United States come from China. They're looking at every other piece of our supply chain and making us incredibly vulnerable. And the only way that we can win is to bring back resiliency and production. And FTZ is a part of this foreign trade zone,
Greg,
help ensure resiliency.
Because it allows you to, look, I'm an importer. I import $100 million worth of goods, and I'm selling it for $500 million, let's say, all right? I got hit with a $30 million extra tariff fee, so my cost of goods sold went up 30%. If in a foreign trade zone, I can give that same importer $5 million a year back, I've just cut his pain by 20%. That is a huge benefit, and it goes straight to the bottom line. It is effective literally the week one that you turn on the foreign trade zone, you get that money back. So this is a program that a lot more people have started to get into it than did before, but it absolutely is, as its time has come. And if you're importing even $10 million a year of imports, you need to look at a foreign trade zone really seriously.
And Curtis, if we're going to bring back manufacturing into Americas, you've got raw materials, you need to use the foreign trade zone because you only pay the tax, the duty, when that leaves the foreign trade zone, which is, I think, from a timing element, from an inventory element, that is so important in terms of cash flow, because you're not tying up working capital in tariffs that you paid for. You're able to take advantage of foreign trade zones. This is nothing more than America than saving taxes. We should be pushing this. We should be building this. We should be expanding this. God bless you, man.
Thank you, brother. You know, we've been doing it for 45 years. There's very few things that we haven't seen, but I have to tell you that this administration they're pushing against the goads, if you will, that old expression, and it's working. The foreign direct investment in the United States is quintupled in the last 2 years. Quintuple, 5x. We're privileged to work with some large companies in the technology sector that are making billion-dollar commitments, hundreds of billions of dollars commitments to set up shop here in the United States, hire U.S. workers, hire U.S. construction and labor, and the profits stay here in the United States. That's the key that he's unlocked. And quite frankly, I think he's done a great job with it. I don't like the way he talks, and we're not going to get into it. But he drives me crazy. But, you know, the net effect of all this is going to be positive. And
Look,
it's going to grow American jobs.
At the end of the day, I don't care who's in office. I want America to win. I am always going to root as an American. I don't care if it's blue, red, green, orange. It doesn't matter. We're all Americans. We should be rooting for America. It's a great time. We're 250 years old. We're a warring nation, but we're also a nation that doesn't like taxes. There is nothing more American than throwing a tea party when you're being taxed. And I think that's why this is important, and it's every supply chain manager needs to be considering limiting their taxes by moving their operations into a foreign trade zone so they can benefit from a great American experience, which is not paying taxes when you really don't need to.
So Curtis.
And today, Craig, it's so great because I never have to move to get into a foreign trade zone. I wrap foreign trade zone status around my current existing facilities, wrap it around where I'm going to grow, wrap it around, any facility that I want. 99% of all locations in the U.S. qualify.
So what does that application process look like? I understand it's relatively timely, 3 to 9 months. What should people start doing right now, today, to get moving in that direction?
Great question. First thing is analyze the full amount of costs and resources. Look for third-party help, because third-party help, we have 3PL logistics operations in the U.S. that are now leading all logistics versus my own company doing it, right? So people have realized, hey, 3PLs make a lot of sense. They make a lot of sense in the FTZ world as well. And the software has become so sophisticated, so easy to manage for customs, so accepted by customs that you're foolish to not do that. Number 3, once you look at the cost and the benefits, then hire a professional to get it done. It saves you about 10 months in the whole process.
Great.
And Curtis, I imagine you're happy to, anyone who wants to learn more about it and potentially partner with you guys, you're happy to take their call. I'm telling you, nothing excites me more than America being Americans, which is finding ways to not pay taxes when it comes to benefiting from the tax code and reindustrialization. I'm not against paying taxes, but I think when we can build a stronger America supply chain and the law allows us to do it, you should be taking advantage of those things at every single angle. We need to bring back reindustrialization. We need to bring back American production. It is a national security thing, and nothing infuriates me more than the idea that we have sold out, not because businesses did anything wrong. They did what they were supposed to do, which is maximize shareholder return short term. It's because we didn't realize the entire time in the process of doing that they were exposing us from a national security standpoint. And look, our adversaries, specifically the Chinese, are incredibly brilliant people that think in terms of 50 years. We think in terms of quarters. This is the type of product that you should be taking advantage of to ensure American production.
And you brought up a real good point. We have to have the ability to see more strategically, and in America, we don't. We have to start looking 5, 10, 20 years down the road. How does this all affect and impact us? And I think we made it too easy back in, hindsight's, 2020, but I think policies that were implemented in the United States in 2000s to 2010, 2010 to 20, made it a lot easier for us to just offshore all manufacturing.
Well, I think the incentives...
We didn't realize how painful that was going to be.
But now the incentives were there. Ultimately, capital markets, short-term earnings, if I were running a publicly traded importer or a publicly traded manufacturer, I would have done the same thing. I think the problem is that we, as a society, did not realize we were exposing ourselves to a national security risk. If you look at every single war, it's always won by supply chain and logistics, and U.S. production is integral. We built astounding numbers. 500,000 airplanes were built during World War II. Did you know that that's more airplanes built in that 4-year period than we have entirely globally running around the world?
And guess where they were built?
What's that?
They were built in Ford, GM, and Chrysler plants.
They were auto plants.
They were built in auto plants.
And Adolf Hitler did not believe America did not have the resolve. He learned the hard way that not only did we have the resolve, but we had the supply chains to actually win that war. We came in, we kicked butt because we had a resilient supply chain, we had American manufacturing might, and that is why this is such an important topic. And taking advantage of these resources like foreign trade zones enable us to redo that without having a lot of the taxation and working capital issues that you typically have. So God bless you, man. I hope everybody takes advantage of foreign trade zones. It's an important thing. There's nothing more American than throwing tea into the harbor and not paying taxes when you're getting absolutely screwed by by the government. Julie, I got to tell you, I'm so excited.
Clearly, yes.
I have woken up to the idea of throwing the tea into the harbor and declaring America's supremacy to world supply chain and manufacturing. When we will be right back after these messages.
Thank you.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
Julie, you know, nothing fires me up more. I am a red-blooded American, and I don't care who's in office. I will support them regardless, but I am excited when America wins. And I like watching Portugal versus the United States was amazing because that was America at its finest. And look, I know there was a lot of heat over the White House presentation, but we're a warrior country. We've been at war for 235 of the 250 years. Yes, I understand that there was a lot of noise about that, but I don't know, aircraft flyovers, American warring people, something cool about America winning, right? And we should be so proud to be Americans. We do great things.
Yeah, and it's been so fun to watch the World Cup and to just see
America.
it
I love
happening
the German
here.
Freddie. Have you been paying attention on X? Freddie, in fact, he was in Chattanooga. He was at the Chili's next door a couple of nights ago. He's a rock star. He's like,
awesome.
I think he got invited. They're going to bring a private jet. One of the groups that is going to invite him out to Vegas. The White House apparently gave him an invite.
JJ Watt had him stay at his hotel in Houston and had him all set up there. He's doing all sorts of cool
What's
stuff.
better than having Europeans and the world, the Japanese, Europeans, come experience the greatness of America that's written in Buc-ee's and Waffle House? We know how great America is. It's great for the world to experience
Lamine Yamal at
American
Walmart.
culture. And there's nothing more American culture than Buc-ee's, Walmart, Wendy's, Waffle House. Like, those are great American institutions.
Not all healthy, but all
it doesn't matter.
Like, I do have a feeling of nostalgia and happiness associated with it.
Especially in the South. Is there something about that being in the South that makes it even more exciting?
Maybe.
I think so.
Well, if that conversation wasn't enough to get you very fired up and excited about foreign trade zones, there is a whole paper written as well that we can get from our last guest, and it really breaks down the unit economics, like of exactly where you could be saving and how much based on the amount of inventory you're holding in over a specific time frame. So very cool topic to talk more about. I think it was a great group of guests today.
You know what I'm excited about?
Yeah.
I'm excited. Tomorrow is the best day of the week. It is Wednesday. It is the time when the American Association of Railroads does their report. And why I love this report is it tells us about industrial demand. We cover it every single Wednesday. The AAR report, we have Bill Stevens, the editor of Trains Magazine. He is going to dive into what we're seeing in the industrial sector because there's really nothing more relevant in terms of industrial activity than looking at rail data.
Yeah.
That is tomorrow. We have some great guests tomorrow. We have Genlogs on. We also have, the Director of Partnerships for Genlogs will be there, Daniel Spinelli. Who else is tomorrow?
We have Matt Yearling, the CEO of YMX Logistics, talking about
That's great.
Autonomy on logistics yards. So I think that'll be a great conversation as well.
We're going to hear all about yards, and we're going to hear about reindustrialization. And then John Kingston's coming on tomorrow, too.
Yep.
To talk about oil. He always loves the oil. Lots to talk about. Thank you so much for being at FreightWaves Today. Don't forget to tune in at SiriusXM. We moved to 6 p.m. apparently now on Road Dog Network, as well as you can get it on demand every morning at 6 a.m. and 8 a.m. You can do it on demand anytime, actually, but we stream it at 6 and 8. Thank you so much. Have a great day.